Hi everyone, Ben Driggs here, Navigate Financial. Today I would like to talk about, for our quarterly review, we're going to break it up into two halves. This is the quarterly review, and then the market review and the market outlook. So we'll start talking about what has been happening in the last quarter. Then we'll talk about what I anticipate is going to be happening here in the next quarter, or as we head into next year. But before jumping into that, what I would like to introduce is kind of a metaphor for the things that help or hurt the economy, and specifically what helps your portfolio go up, what helps or what hurts your portfolio and causes that to fall. So the analogy I'd like to use, the metaphor, is a hot air balloon. Okay, so hot air balloons, obviously we want them to have lift, and we do want the economy to be lifting and to be growing, and there is some inflation as part of that. A little inflation is healthy. We don't want zero inflation. So economists like to see 2 or 3% inflation is a very healthy rate of inflation for lots of reasons. So that kind of lift is good. The question is then, what things lift the balloon high? Well, there's this equilibrium when you're doing a hot air balloon. A little up or down, that's fine, but we don't want to be flying off to the moon. We don't want to be crashing into the ground, right? So what keeps us in that comfortable band, and what moves us high, what moves us low? So let's talk about the things that move us too high. The things that move us too high are a strong economy. If the economy is really, really strong, everybody's working, that drives up wages, that's good. But people spend more money, people can afford to, restaurants charge more, manufacturers can charge more, workers can charge more. And we did see a lot of inflation a few years ago, right? Because that was a longer story. For years and years you had low inflation and you had low interest rates, lots of money around. So having lots of money in floating around, that tends to be inflationary. Strong economy is inflationary. Tariffs are inflationary, and that's a recent thing that we're going to be talking about, and that is impacting 2025. So those are the kinds of things that move, that we like to see, but not in too much abundance, okay? The things that move the balloon down are deflation. That would be high unemployment. Oh, I lose my job, therefore I have less money to spend. That, the economy retracts, and that is a downward cycle. We saw that in 2008. Of course, that's very scary. So it's like the balloon falling to the ground. I'd rather have the balloon lift off a little higher to the ground than have this sensation that I'm falling to the earth, right? So things that move that down are recession, weak economy, high interest rates. So what the Fed has been doing, because we've had this inflation's been too strong in the last few years, the Fed has been raising interest rates because it's harder to borrow money. And when it's more difficult to borrow money, the cost of borrowing is higher, then that disincentivizes people from investing and borrowing and moving the economy upward. So high interest rates start to move things down. And in fact, that has been happening the last couple of years. It's been slow, but it's been steady. Interest rates high, the economy has been slowing down, and that's all well and good. So these are the factors, some of the factors, many more of course, that move the balloon up and move the balloon down. So what has been happening and what do we see happening going forward? So as a market recap, in the third quarter, it was really an optimum quarter because inflation, while it's going up, the fears earlier this year about tariffs being a real problem, they have not amounted to much of a problem so far. And so people are starting to say, well, maybe the tariffs aren't going to be that much of a problem. Time will tell if that in fact is the case. But at least in the third quarter, people are starting to get comfortable with the tariffs. The economy is still strong, a lot of lift in the economy still. Unemployment has not been a problem. It's kind of, so that's on the, not too much up, and on the downward, we're not seeing, mass unemployment. We're starting to see interest rates starting to go down. So there's just been this perfect equilibrium in the third quarter, and that is why virtually everybody, if you're watching this, your money has gone up in the third quarter. Everybody made money in the third quarter. Great quarter, very happy, near perfect conditions. No, so let's talk about the fourth quarter and moving into 2026. People tend to think kind of in the immediate term. They don't have long, attention spans or memories, because we tend to think, oh, things are really good. They've been really good here in the third quarter. That's going to continue. Maybe, maybe not. So whereas right now, I think we're in an optimum, very neutral spot. The balloon is just in a great spot. The markets are always pricing about a year ahead. And right now, the markets are thinking, hey, we could continue this for a long time. There's no reason why we can't have this Goldilocks, not too hot, not too cold, for many months to come. And that is why right now the markets are pricing a very optimistic outcome over the next several months and the next year. They're saying, hey, I think that this is very sustainable. That may or may not happen, okay? So it could. Maybe there's a 1/3 chance that it goes too hot, too cold, and right in the middle. So I would assign potentially a 1/3 chance that we can continue to go on this. But I also ascribe perhaps a 20% chance that inflation does end up being a problem again. It rears its head. Tariffs, the full effect of the tariffs has not been manifest yet. We don't know if that's going to be a big thing. There is a distinct possibility that it is worse than we had hoped during this last quarter, in which case people are going to be stretched, spending will go down, there's going to be a lot of grumbling. No one wants inflation, right? So that is not a happy outcome. And there's a chance. I think a slightly higher outcome, if we say maybe 30% chance we keep on going, 20%, there's maybe a 50% chance that the economy worsens worse than people are anticipating, that maybe unemployment goes up more quickly, that the combination of inflation being higher and the economy weakening, that those things can snowball. Consumer sentiment goes down quickly. So we could have a kind of a negative, pessimistic spat that could turn to be worse than expected. If that happens, then stock prices will certainly fall. Ironically, bonds do well in that environment. So if you're conservative or moderate, certainly conservative actually might do well in a really weak environment, and a moderate investor might not do too poorly, because a moderate investor would have some bonds that do well when this economy goes down. So for most people listening to this, if the economy goes down, if you're conservative or moderate, I don't think it's going to be that bad, and you shouldn't be particularly afraid. If you're 100% aggressive stock and the stock market goes down, that's a different thing. So if you're 100% aggressive, you don't want the economy to go down too quickly, right? So that's maybe where I see things going over the next several months. If you're listening to this, obviously give us a call. We can talk about how your portfolio is operating. But I would say in general, I'm relatively neutral. I think there's more room for the economy to continue to expand and for the balloon to have, many months of smooth sailing. But if I had to bet, If it goes out of bounds, my thinking is it's likely to be more negative. And for that reason, I want to have a little more bonds, a little more conservative, and maybe fewer stocks. Take these gains that we've enjoyed this year. Let's not get ahead of ourselves. Let's not be greedy. It's been a great year. You've made lots of money. Let's finish the year strong. And I'll talk with you in a few months as we head into 2026. Thank you very much for your business. Have a wonderful fall, Halloween and Thanksgiving and Christmas. It's a fun time, a change of seasons. And hopefully the cooler temperatures, using the balloon analogy, don't cause the balloon to crash to the ground or anything like that. Here's to smooth sailing ahead. Thank you again for watching. Bye now.